Hello, this is Japanese Economic Review Channel. Today, we analyze the April 2026 Consumer Price Index released by the MIC. The headline inflation rate currently sits at a 1.4% plateau. We will look beyond this surface number to understand the structural shifts, policy impacts, and extreme price volatility affecting the Japanese economy. The April 2026 overall CPI rose 1.4% year-over-year. However, the core index, excluding volatile fresh food and energy, increased by a higher 1.9%. Interestingly, while YOY figures are positive, month-over-month core dipped by 0.2%, suggesting a slight short-term cooling in underlying momentum despite strong domestic demand. To understand the true inflation trend, we must look at different baskets. The overall CPI reflects the actual consumer cost of living. Core CPI excludes fresh food to remove weather-related noise. Core further excludes energy, providing the purest reading on underlying domestic demand and wage price pass-through. This chart illustrates the trajectory from the peak inflationary pressures of 2023 to our current state. While we have descended from the 3.4% peaks, inflation has stabilized at a 1.4% plateau. This suggests that moderate inflation is settling into the economy, replacing the deflationary trends of the past decades. Looking at short-term momentum via seasonally adjusted month-over-month data, we see a stalling trend. Overall CPI edged up just 1.1% in April. Core remained flat at 0.0%, and core contracted by 0.2%. This short-term deceleration contrasts with the positive YOY figures, indicating a pause in price growth. The 1.4% headline increase is highly concentrated. Food is the massive driver, pushing the overall index up by 1.02 points. Conversely, categories like miscellaneous expenses and clothing act as deflationary drags. This highlights a divided economy, where essential grocery costs vastly outpace discretionary spending. Within the food and communications sectors, localized volatility is extreme. Coffee beans surged an astonishing 46.8% year-over-year, and chocolate jumped 21.6%, reflecting severe global supply constraints. Mobile phone fees also rose 11.0%. These severe price shocks for everyday staples mask the broader macroeconomic plateau. A massive deflationary illusion exists within the education sector. Public high school tuition plummeted 94.1% YOY, and private tuition dropped 68.8%. This is not due to falling demand, but rather structural policy interventions like tuition waivers, which artificially suppress the headline CPI by over 0.3 points combined. Energy presents a statistical dichotomy. Year over year, total energy appears deflationary, down 5.7% due to base effects. However, the short-term reality is starkly different. Month-over-month, energy costs spiked 5.1%, with electricity bills surging 10.6% in just 1 month, putting immediate pressure on households. State intervention heavily distorts our reported 1.4% CPI. Trial calculations show that energy subsidies and gasoline tax policies suppress the index by roughly 1.95 points combined. Without this massive policy suppression, the true underlying market inflation rate would be highly elevated, sitting near 3.35%. While energy fluctuates, core processed food remains a persistent inflationary driver. Excluding fresh food, food prices are up 4.1% year over year. With a massive weighting of 2,230 in the CPI basket, this stubbornly high grocery bill is the most noticeable and painful expense for the average Japanese household today. We are witnessing services outpacing goods. While household durable goods rose a modest 1.8% year-over-year, accommodation services jumped 4.6%. Driven by a resurgence in domestic travel and strong inbound tourism, experiential services are generating much stronger upward price pressure than physical household items. Context is crucial. Compared to the 23.2% oil shock of 1974, or the recent 3.2% supply shock peak, 1.4% seems tame. However, following the deflationary decades of persistent negative prints, this current plateau signifies a structural return to normalcy and a definitive regime change for the Japanese economy. Looking ahead, the mid-month preliminary Tokyo-ku area data for May will be released on May 29th, acting as a leading indicator. The national data for May follows on June 19th. We must continue to watch how policy effects, a weak yen, and global supply chains influence these upcoming figures. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.